So Citadel Securities is not doing okay. The renowned hedge fund seems to be struggling. I personally thought that they were doing okay after posting record profits last year in 2022, but recent news show them having to borrow a lot of money. And that's awfully concerning given the new level of debt that they have. So let's go through it. Hey guys, hope you're all having an amazing Wednesday full of positivity and happiness. I want to thank you all for the kind messages that you guys left me on my last video, especially in regard to the new type of format that I'm using on these videos. Today's been very chaotic on the market. I'm not feeling well. My voice is kind of weird, so that's why I kind of sound different this time around. But still, we're gonna go through a lot of content today, so stay tuned, sit back and enjoy. Let me know in the comments down below what you guys think at the end. Before we start, I wanted to invite each and every single one of you glorious diamond-handed degenerates over to my Discord. If you're looking for a long-term, group that just wants to invest in the best stocks available in the market, or if you're looking for a group that day trades, that signals, that provides educational material on how to find, spot, execute your orders, come join my Discord. It's going to be pinned in the comment section down below. We have the best trading group out there. You'll see for yourself. We have a poll dedicated for the members every single day that shows over 3/4 of the entire Discord comes out profitable in the day trades. And then we have the long-term investment side of that, which is also growing, and it's amazing. So come and join and say hi. Having said that, let's get started. So recently I came across an article by Routers that says Griffin Citadel is set to return back around $7 billion in profits to investors, according to a source familiar with the matter. Their flagship multi-strategy Wellington fund returned 14.8% this year through November. Last year, Citadel returned roughly around $7 billion or so in profits to their investors after posting gains over 30%. According to Routers, Citadel is now set to start 2024 with $58 billion in assets under management, which outperforms many of their peers in recent years. So let's take a moment and kind of take this in. Citadel is breaking records, performing well under the current circumstances. All is fine and dandy when it comes to Griffin. At least that's what it appears to be when you only look at it from a superficial glance, right? If you're looking from afar, if you Google Citadel, you'll come across a lot of articles talking about, how Citadel's doing amazing. They're, beating records. They're at their peak right now. So after my last video, I spent a lot of time researching Citadel and Griffin on the web, just looking for new information that might pop up that shows that not everything that's being pushed by the big corporate media is true. And I came across a certain tweet by Investor Turf that said Citadel Securities secures a $400 million loan adding to their debt. Now stop for a minute. Why would Citadel Securities need to borrow $400 million? Like I said, they're beating records, right, in terms of revenue, in terms of profit. They just said that they're returning around $7 billion back to their own investors. Why would they need to borrow $400 million? That's a crap ton of money. So I started digging a little bit deeper, looking for the source of this tweet, and then I came across an article by Bloomberg. The article started off by disclosing how Citadel's third quarter revenue rose more than 8%, detailing how they generate. Why is Citadel now showing up as having $4 billion worth of debt? Bloomberg followed up this, and I'm just going to be reading off of them. Citadel Securities launched a $400 million loan on Monday with proceeds to be used for general corporate purposes, including trading capital. The new debt, which holds the lowest rung of investment grade ratings, will be added to the company's existing $3.54 billion term loan. Bank of America is leading the transaction, and institutional investors must decide if they will participate by Wednesday. There you have it, people. For a company performing so well, they seem to be adding quite an ugly amount of debt. But what if I told you that this whole situation gets even weirder? So Griffin and some other guy named Geffen, I don't know how to spell that. Geffen, I'm just gonna call him Geffen. have announced a donation of $400 million as well, the same exact amount of money that Citadel just borrowed from Bank of America. This so-called donation, right, is said to have been made with the heart in mind, with the intent to advance research on a cancer cure. But what if I told you that this whole situation somehow gets even weirder? Ken Griffin and some other guy named Griffin have announced a donation of $400 million, the same exact amount of money that Citadel just borrowed from Bank of America. This so-called donation is said to have been made with a heart in mind, with the intent to advance research for a cancer cure. Now, outside of the increased suspiciousness of all of this, I really do wonder how many promising drug and medical companies Citadel themselves have shorted out of existence, just like they and their friends attempted to do with GameStop. I have a very hard time believing that Ken Griffin, is out there trying to help the world. So I went to Superstonk and I read what other people are theorizing this to be. Some of the comments in the internet were talking about how this is just a way for him to launder money, while other people were talking about how this is all just a way to write off taxes. Now, me personally, I have no idea what's happening, but receiving millions of dollars in loans from no other than Bank of America, then donating that exact amount to some cancer research company is incredibly questionable. Why does Citadel even have any debt, right? Like, they quite literally just made back $7 billion for their own customers. That's on top of the fact that this past Monday, like 2 days ago, 4 Citadel portfolio managers left Citadel as well. So, there's a lot of weird things going on. I have no idea what's happening, but I did want to, share those things with you guys. Now, the next thing is I have to disclose that I came across this article and I did not see Citadel being involved with this. So take that as a note, but apparently there's a whole bunch of hedge funds that are now suing the SEC, alleging that the agency broke the law when they finalized a pair of rules aimed at collecting data on short sales earlier this year. I kid you not, people. Out of all the things that we have talked about today, this one triggered me the most. I'm just going to be reading the article straight to you guys, so just bear with me. The lawsuit, which was filed in the U.S. Court of Appeals, is attacking rules adopted by the SEC this fall that requires the reporting of short sales and security loans. The reports are said to be anonymized, but the funds argue that the agency ignored how the rules interact and that they somehow harm investors. The MFA president, Brian Corbett, said that despite their best efforts, the SEC decided to ignore the interconnected nature of these two rulemakings and failed to apply a consistent approach or principle to regulating these related markets. The resulting rules are arbitrary, and the SEC apparently needs to go back to the drawing board. The challenge, which was brought by the MFA, the Alternative Investment Management Association, and the National Association of Private Fund Managers, it's just the latest pushback from the hedge fund industry against the SEC. This summer, the MFA sued the SEC over new rules that required the fund managers to get investors' consent before trading some investors better than others, among other provisions. These people do not want clarity. They do not want transparency because they understand that the best way to make money on Wall Street is not by being competitive, it's by cheating. I've said it many times before. Accountability on Wall Street is like kryptonite. That's it for the video, guys. Thank you all so much for watching. Let me come here once again and tell you guys to please come join the Discord. Look at the trades we have made so far today. We want you guys in there with us. The alerts are the most consistent ones that you will come across in any type of trading Discord server, and the amount of content that we add monthly makes it so much worth the pain.